being delivered by Camilo Galvis, who's the CEO of the Imperative Fund. And Camilo, if you can come onto the stage. I first heard about this in discussion. Camilo, hello.
Nice How are you, Kessia? Great to see you.
Very nice to see you. And I was speaking with your colleague, Huda, who was telling us about your investment interest in Ghana, actually. And in the course of that, heard more about the work that you'd been doing in Mexico. And given the way in which the conversation has evolved over the last 2 days, we thought that this would be a really interesting input to make. Is your Mexican experience, specifically the questions that have been raised today have been around scale, around minimizing the cost of the house so that it is truly properly affordable to households who are there, and then how do you manage that entire process and the financing of it and so on. So let me just hand over to you, and I understand you have a presentation that you'll show us, so please go ahead and do that. We're all very excited to hear what you have to say.
Thank you so very much, Kessia. Let me see if I can get the presentation up and running, and if you can see it on your screen. Is that the case?
Yep, it's there. Beautiful. Thank you.
Okay, perfect. Thank you so much. So first of all, thanks a lot for the invitation to participate in the event. This has been very informing. So I'm going to try to make the most out of these 15 minutes that I have to give you a sense of what we've been working to achieve outside of Africa, outside of the continent right now, focusing in Mexico in particular. And of course, one of the reasons why we're here is because we have been now for 2 years doing research on how to basically bring our model to the continent. And as Kessia mentioned, we have been focusing in Ghana after several rounds of research. So very quickly, we are based in New York City. We operate as a fund, as a registered fund in the US. What we do as a fund is basically try to address scalability when it comes to poverty elimination through homeownership. And we do that basically by targeting marginal communities where we can work with what is defined as the underserved population. I'm talking about people that do not have basically a credit history or a proof of income. In order for us to do our work, we conduct a relatively thorough analysis of a country prior to starting operations. As in, for example, in the case of Mexico, it took us a couple of years to review a little bit more than 80,000 communities. And in each community, we will try to understand how many people live in the community, what is the average number of people per household, what is the average income per household, and what is the lack of access that they might have to something that we refer to as the basic material goods and services that we're going to try to provide to these communities. So when talking about the suite of goods and services that we want to basically try to provide to these communities, we start at a very basic level. We want to understand whether a given community has a proper urban development plan. If so, how many of the people have access to structural housing within the communities? If they have access to basic utilities, water, sewage, electricity, access to a telecommunications infrastructure. And then beyond that, we also try to understand the capacity for us to implement additional ancillary services that can include, for example, solar energy, a comprehensive healthcare system. If waste management is required, whether we can somehow bring in the municipality, local government to basically assist us in assist the families in the implementation of a proper waste management system. And furthermore, something related to something that we call the poverty tax, which is marginal communities, people of low income end up spending more than the average consumer when it comes to the premium that they pay per unit of consumption of food, detergent, and whatnot, just because of the small quantities that they can afford on a daily basis. And we also try to address that. But to basically bring it together from a more comprehensive view, what we try to do basically can be summarized the following way. We go to a community, we find a piece of land within that community adjacent to what it's already the urban development zoning plan of that community. We take that piece of land, and then we ask families who might live in under slum conditions or carton board houses or tin metal rooftops, whatnot. We try to get these families first to sign in with us to become part of a financial literacy workshop. These workshops last between 3 to 6 months, and they have a twofold objective. Number one, on our end, is to start conducting a KYC on the families. We need to basically understand how the families are making a living. And at the same time, we want the families to understand what are their sources of income and also what are their monthly or annual expenses. From then, we also wanted to start considering the concept of saving for two reasons. Number one, equally important, is that sacrificing consumption today is fundamental in order to be able to have access to something better tomorrow. But number two, at a more practical level, the families that we sign into the program, we want them to get to save 10% of the construction cost of the homes that we're going to be offering. So now if I go a little bit more into the details of how the program works, families get into the financial literacy workshops. The families, we monitor them, get to save 10% of the construction cost of a home. And I'm going to give you some numbers now. And what we do is the following. We enter into a partnership, and this is part of the reason why I am giving this talk right now, is also to elaborate on how we brought in different, basically, partnerships with government entities and some other private entities in order to create a system that allows basically for us to be able to redevelop a marginal community and work with as many families as possible in order to achieve the following. Families go into the financial literacy workshop, they save 10% down payment of the construction cost of a home. The homes that we're building, currently, we do so in partnership with a home builder in Mexico. After we reviewed several ones, we settled for the one that we consider to be the best alternative in terms of quality and cost. So the cost of a home roughly right now is a little bit less than $11,000 US dollars. And what we get to do the families to save around $1,000 for the construction cost of that home. Bear in mind that the land that I'm referring to that we bring into the project, usually we get it directly from the municipality, or it's donated to the project with resources of the state level government, sometimes the federal government. So what we have is land that has been contributed to the project, and we also have families right now that have saved the 10% down payment of the construction cost of a home. Because of the regulation in Mexico, when the land is within the urban development zone of the community, there is an obligation for the inclusion of basic utilities. So we know that we're going to be able to have access to clean water, sewage, and electricity as well. The land usually that we use, that we allocate to each individual family, has roughly 100 square meters. And this land has roughly a valuation of $20,000 after the inclusion of the basic utilities, water, sewage, and electricity. So what we're saying here right now is that I'm going to have a family that is making a $1,000 down payment on a property that already has a $20,000 intrinsic value. That's the land plus utilities. And then we're going to work on basically wrapping up the construction of a complete home, where we also need to spend roughly an additional $10,000 for a total of $11,000. So what we do as well is we partner with a federal entity that provides subsidies to our target population. That is the underserved population that I referred to, no credit history, no proof of income. And usually the subsidy comes at around the value of $4,000. So altogether, we have the land for $20,000, down payment plus subsidy at $5,000, and the remaining $5,000 to complete the construction of a home. We originate a credit to the families. We do it, of course, by partnering not only with home builders, but also with properly regulated financial entities through whom we can basically allocate this sort of credits, quote unquote, mortgages. And I'm making the distinction between a mortgage and a construction loan, which is what we provide because the home has not been completed. Thus, what we're doing is basically making a construction loan, not actually a technical mortgage, although for all practical purposes, they operate similarly. Once that's done, basically the family gets this loan for the remaining $5,000 with an amortization period of 5 years and a fixed monthly installment for the family to repay the loan. Why is this important for us? As I mentioned initially, we were looking for scalability when we first started thinking on how to approach this basically redevelopment of marginal communities. So we understood from the start that we needed to be able to have access to the capital markets. And in order to be able to have access to the capital markets, we needed to make sure that the return and risk profile of the investments that we make while generating these credit loans to people at the base of the income pyramid could basically, quote unquote, compete with the other more common products that might be available within any economy when it comes to basically the origination of debt. So in that order of ideas, we wanted to make sure that we can comply, we can achieve three objectives. Number one, provided that when we make the loan for roughly $5,000 on something that can be considered to have a $30,000 value, the loan to value is attractive, has become attractive to large development institutions. So we started initially the fund working with private capital, but we always knew that we had to have access to deeper pockets in order to be able to address the needs of the segment of the population, in this particular case in Mexico, that requires some sort of improvement on access to structural homes. And by that, I mean that we started working with the Development Finance Corporation of the United States this year. The loan to value basically is of importance because throughout the lifetime of the loan, the collateral for any potential default on the repayment of the debt is the land and the home that has been built. We have a social purpose, so rather than waiting for somebody basically to default on a property so that we can take on that property and probably sell it in the market or without at a discount, what we actually do is we have oversubscription of families in our program. And on average, a community at Imperative has roughly 300 families to start with. So what we do usually is have at least 400 families already into the program that have been properly approved. And in the event the family stops payment or defaults on the payments, what we want to do is bring a new family into the program so that they can basically, they're going to have to start from scratch. The previous family is going to recover the principal amount that they paid. And then at the end of the day, we just want to make sure that we can keep our cash flows rolling. One thing of importance now that I'm talking about the different, what's happening to the different players in participating in this project. Number one, we want to make sure that the families after 5 years have actually not only been able to move physically from a marginal self-developed community, but to a proper developed community with access to all this material goods and services that I described initially, but also that after 5 years, the family has built a credit history so that they become part of the regular economy. And even more so, we want to make sure that their investment actually has generated proper returns so that by the time that we're done working with the families, they have access to a structural home in a functional community. They have basically created a credit history and they have built a net worth around their investment. So to highlight some of the results to date, the families that we have worked with, I'm talking about 500 families now, 635 new families starting already under the process of going through the financial literacy workshops as we speak for the next couple of months to eventually start making their acquisitions of their homes, and an altogether pipeline for the next year and a half of 5,000 more families, 14 communities in Mexico working together with the Development Finance Corporation. The results today are that families after 5 years end up paying net of fees and the servicing of debt an approximate $9,000, slightly less than that. But the valuation of the homes that they're receiving at the end of the program are coming up at around $36,000, meaning that the families, our beneficiary families, have basically been obtaining returns of around 32% in their acquisition of the homes. Equally important for us, moving to a little bit more statistics, is that our investors at the fund level have been receiving roughly a 13% return in US dollars, which is quite competitive, double digits within the capital markets, which is what actually allowed us basically to be able to put together a structure with a development finance institution like the DFC in the United States in order basically to be able to increase the scope of the project to a scale that now start becoming basically potentially effective in addressing poverty elimination at the scale that is required in Mexico. This experience and the relationship with the bank has basically taken us now to a position where, also in conversations with the bank, they were actually the ones that initially guided us or made the suggestion into starting to explore countries in the African region where we could take a look and see if the model is replicable to a certain extent. We know that, for example, we don't need the subsidies in order to be able to properly address the needs of a community, but we have been having conversations with even non-for-profit organizations in the event, for example, in any given country in the African continent, subsidies wouldn't be available. We could try to bring in some sources of capital that help us achieve two things: maintain a risk profile that is robust in terms of loan to value, while at the same time, of equal or more importance, whatever dollar we can reduce the cost of a home to the family is only gonna increase not only their capacity for repayment, meaning that if we don't have a subsidy, probably a certain segment of the population cannot participate under the program, but also, and equally important, is that the returns for the family in their investment of acquiring a home are generate wealth and a net worth for the families that we're targeting through the time that they work with us. So with that said, as I mentioned, our next objective hopefully is going to be Ghana. We've already done a couple of years of analysis in the country. We have mapped more than 1,000 communities. We already have had considerable conversations with local and local players and continental players where we could potentially basically get into these sort of partnerships, trying to spearhead the program in the continent. And we have still yet to figure out a couple of things related to the land that can be available for use and the locations where we would like to get started, but we envision that this could happen within the next year. So we would be happy to engage in a conversation with anybody who might find it of interest and would like to further understand the results that we have obtained working in Mexico and the validity and feasibility of the model in Africa.
Sure. Camilo, thank you so much. That's really so interesting. And I wonder, do you have a case study that you've written up of your Mexican experience?
We don't have the official case study as you might require, but we do have quite an extensive document that we had to work with when we were working with the Development Finance Corporation in order to define and highlight how each single project should be addressed. So it's more than a case study. It's actually a cooking recipe of how to intervene in a community, and we will be very happy to share it with you if that should be of interest.
That would be great. I'm sure that there would be many people who would be interested in that, and we'd be very happy to circulate that so we can discuss that afterwards. But I wish you all the best with your endeavors in Ghana, because I think that what you've achieved in Mexico is really interesting, both in terms of the number of units you've developed and the households whose lives you've affected, but also, as you say, shifting the mindset in understanding a new way of investment and then trying to crowd in more investors who can start to see the opportunity in the way that you've demonstrated it.
Thank you, Kessia. Indeed, that has been an important part of the model. It's all about trying to be able to allow the mechanism to work for everybody, private sector, public sector, and of course, benefit the beneficiary families at the end of the day.
That's wonderful. Well, thank you so much. And thanks for coming today to share it. And we look forward to further engagements.
Absolutely. Thank you so much to you, Kessia.
Excellent. All the best.